Hello and welcome. I'm Suyash Maheshwari and you are watching Last Tick here on News9, where we break down the day's action on the Lal Street. And Nifty has scaled a fresh record high on Monday as Indian markets extended their winning run to 5 sessions. Nifty kick-started the week above the 22,100 mark, and after some initial choppiness where the index tested 22,000 levels, bulls were able to take charge and kept the mood buoyant throughout the session, and as a result the index was able to make a record high of 22,186. And remember, the new record high comes after a gap of nearly 11 sessions. However, volatility in the last hour of trade took Nifty off the record highs, and the index formed a spinning top sort of a pattern on the daily charts. Now, the formation of a spinning top pattern indicates indecisiveness among market participants, and you can make a case for both bulls and bears from here on. On the upside, if we extrapolate the Fibonacci levels from the recent low of 21,137 to the previous record high of 22,126, the next level of resistance comes in at 22,395 mark, which is the 127.2% extension level. Beyond that, the index could test perhaps 22,535 levels, which is a 141.4% of the Fibonacci extension level. So on the downside, the first support could come in at 22,126, which is, by the way, the previous record high, and then 22,000, which is a crucial psychological level. And then even if we break below 22k, the 20 DMA, the 20-day moving average, which is placed at 21,730, could provide some support. A reversal of trend, although, will only be confirmed once Nifty breaks below 21,500 to 550 sort of levels, which, if you remember, was the support area where the index had found some bit of a floor in the period of consolidation that we saw in the last 1 month or so. Moving on, Sensex surged about 280 points to close above the 72,700 mark. Now, the 30 share index is about 700 points away from its record high levels, which it had scaled on January 16th of this year. And shifting focus to the broader markets, they participated in today's price surge. Both mid-cap and the small-cap indices moved in line with the headliners. The mid-cap index surged about 0.3% and ended at 49,310 levels, and it has extended its winning run to 5 sessions now. The small-cap index has also extended its winning run to 5 sessions. That surged by about 0.4% to end at above 16,250 mark. Now, if you look at today's price surge, it was led by the FMCG stocks, pharma stocks, and select heavyweight counters. In fact, if you look at today's price action altogether, about 50% of all the gains for Nifty came from just 3 stocks: ICICI Bank, Reliance Industries, and Bharti Airtel. On the other side, the tech stocks, they capped the gains. They fell by about 0.3%, and this was on the back of negative cues from the US markets on Friday, which, by the way, the inflation print, the wholesale inflation print over there came in hotter than expected, and that's why we saw some bit of a correction in the US markets. And because of that, we also saw some correction in the IT stocks. I think IT was the only sector which ended in the negative in Monday's session. But with that, let's also welcome Amar Deo Singh, Senior Vice President of Research at Angel One. Thank you for joining us here on News9, Amar. Always nice seeing you. And of course, we made a new record high, but if you look at the price charts, you can make a case for both the bulls and the bears. For the bulls, of course, Nifty has been making higher highs for the last 5 sessions. It's on a 5-day winning run, and we are, of course, at record high levels. But for the bears, there was a formation of a spinning top candle, which means we gave up a lot of the gains from the day's high, and then, of course, volatility has picked up. And of course, if you look at the price action, there is a formation or possible formation of a triple top there, because the previous 2 record highs are very close to the closing levels of today. Which side do you lean on, Amar, at this point, the bears or the bulls?
Yeah, actually, if you've been listening, I have been on the bull side, because if you ask me, markets, yeah, we were witnessing consolidation. But if you look at the overall trend of the market from an intermediate term perspective, long term perspective, that is clearly in favor of the bulls. There's no doubt about it. Yeah, short term charts were indicating consolidation, and that's what we witnessed for I would say many trading sessions. So it was more or less, you can say, choppy trading sessions or trendless markets or trading in a zone. So that was what was happening. Today we've seen some up move, but yes, we'll have to watch out whether these levels sustain or not. Because if you look at the levels, so Nifty closed around 22,122, and the high was almost 22,186, and the previous high was on I would say 16th of January, 22,124. So that tells me that so 22,100, 22,200, that's going to act as a very strong zone of resistance where we could witness some sort of consolidation also. But overall, the trend remains positive. Yeah, till the time we don't see Nifty trading below the 21,500, 600 zone, I would say more or less it's still in favor of the bulls. But yeah, at these levels, we'll have to be slightly cautious. Looking at the derivatives data, that also has been, we've seen long build-up happening over the last couple of days. But the price move has been, I would say, not that much. So we'll have to wait and watch how the markets sustain, whether they sustain over the 22,200 levels or not consistently. Then we could say, yeah, there's a trend change. The positive aspect is that there's been a broad-based rally across, I would say, different stocks. So the advanced decline ratio is also, I would say, in favor of the bulls. But overall, the structure of the market remains strong and positive.
All right, and what are you making of the spike in volatility? India VIX on Friday, we ended very close to the 15 levels. We are back above 16 now, and one would have assumed that volatility would decline this week, considering that a lot of macroeconomic events like the budget, the monetary policy in India, US, as well as the earnings season, they are behind us. What's leading to this heightened volatility in the market now, sir?
Yeah, I would say if you look at markets generally are unnerved, or not markets, I would say it's the market participants. So, and there are different type of market participants. You've got all sorts of, be it retail, HNI, FIIs, DIIs, hedge funds, all type of funds which are active. So they have their own perceptions of the markets when the markets trade at record highs. Right. And there is also a significant fear of the risk-reward ratio, how that would pan out in case one is looking at investing at the current levels from a medium-term to long-term perspective. So there's a lot of thought that goes through the minds of investors at the current levels, and that's what is being reflected in India VIX as well. Looking at India VIX, I wouldn't say much of a worry till the time we see it sustaining above the 18 levels, because these are levels that's okay. I wouldn't say much. Not much to read into it till the time we see it sustaining above 18, 20 levels. Above 18 would be the first, I would say, yellow signal. Above 20, if it sustains, then we could say, yeah, that there could be something which is really happened or happening in the global markets, which markets are reacting to.
Yeah, actually, I wanted to talk about the global markets because, some bit of a negative sentiment is coming in from there. The wholesale inflation data in the US has come in hotter than expected. Headline retail inflation was also hotter than expected, which is kind of pushing back this narrative of a rate cut by maybe June of this year. And a lot of these emerging markets, they have taken a hit. But we are at record high. Why are we seeing this divergent performance, sir?
Yeah, so looking at the US markets and also looking at I would say the US inflation rate, so that tells that the US Federal Reserve might, I would say it's still a question where the jury is still out as to when would the rate cut start happening at least. So that's clarity is not there. Earlier it was expected that it could happen as early as March, but that's likely to be ruled out. And looking at our markets are, I would say, being supportive. We've had some good earnings season results also in some of the major stocks. And the best part is we are seeing some sort of support coming in for the heavyweight HDFC Bank at lower levels. And today also we've seen some sharp up move from ICICI Bank, because ICICI Bank also plays a very important role in the overall scheme of things, be it Nifty or the Bank Nifty.
Right.
So if you look at ICICI Bank, it's closed in the positive, it's closed in the green, almost at its high. So that's a positive sign. If we go back slightly and see that it had made a high of almost 1,060 levels on 23rd of January. So that's a level to watch out for. But the way the ICICI has closed today, it's likely that we could see a breach of those levels. So if that happens, then we could also see some movement happening in HDFC Bank, and the markets could then move higher. So these are certain, I would say, triggers that one should definitely keep a watch on.
All right, and ICICI Bank certainly provided the support that Nifty needed today. In fact, it was the biggest contributor of all the gains that came in for Nifty on Monday's trade. But another sector, in fact, has been the pharma index. Now that has been constantly providing support for the index, even in the consolidation that we had been seeing in the last 1 month or so. It was a pharma index that was providing some bit of a flow to the market, and the index on the whole has hit a record high. Several of these stocks in the, I think as many as 6 stocks scaled a fresh 52-week high in today's trade as well. Do you think pharma counters, can they continue their momentum, and if so, what do you prefer in this space?
So looking at the pharma index, you rightly said that we are seeing some very strong up move, and also the pharma index is trading at record highs. And if you look at the stocks in the pharma space, so be it Alchem, again very strong on the long-term charts, intermediate term trend, short-term trend also, the stock has moved out of consolidation. If I look at the other stock, Aurobindo Pharma, so this is one stock actually which is not, which did rally, but now we are witnessing some consolidation. So this stock can go in for some consolidation for some more time, till the time we don't see the stock sustaining above the 1100 levels. Biocon, again, I would say slightly positive, but till the time we don't see sustaining over 300 levels, I would say the upside remains capped. Cipla is definitely trading at record highs, continues to remain strong and positive on the charts. And the best part is that Cipla, as recently as 23rd of January, it witnessed significant volumes compared to the average daily volumes in terms of volume, in terms of delivery. So that, and that was at 1400 levels, 1420 levels. So from there, it has moved up. Then looking at the other stocks, Divi's Lab isn't going anywhere in a hurry. So you can say that it's more of a sideways consolidation. Dr. Reddy's again very strong technically on the charts, trading at record highs. So these are the stocks which are really quite strong. Looking at some other stocks in the pharma space, we are seeing some sort of consolidation there.
Right.
The last stock I would like to talk about is, I would say, Lupin. So we are seeing some sort of profit booking happening here in Lupin, but because Lupin hasn't really breached its all-time high, so that was if I go back in time, so that was almost 129 in 2015. So Lupin is still a far cry from its all-time highs, but the trend is very strong and positive. So any pullback in Lupin could be a buying opportunity. So I think that's what I wanted to go speak on the pharma space.
Sure, sir. And another sector I wanted to pick your brains on is the FMCG pack. Has been a weaker segment of the market for the past many months, but some bit of I mean, on the price charts, we are witnessing that the index is probably on a verge of a breakout from the downward sloping channel. Is this a pocket that one can look at this point in time, considering a lot of these other segments of the markets have run up significantly and FMCG perhaps offers some value?
So looking at the FMCG, see what's happening. I'll start with Britannia. Britannia, we've seen some sort of consolidation. We've seen a top being made. So that tells me that Britannia is finding support at the current level. So 48.50, 4900, that's a level to watch out for. If it reaches that level, then the next crucial zone is around 4600 levels. But overall, the trend remains positive for this. Looking at the other stocks, if I look at the other stocks in the FMCG space, be it Colgate, Palmolive. So Colgate continues to remain strong and positive, but we are seeing some sort of consolidation there. And then the next stock I would talk about is Godrej Consumer Products. This is very strong technically on the charts, but again, it has made a top. So 1300 was a top. It's trading around 1230. So in FMCG, we are seeing some sort of consolidation. And HUL is definitely, I would say, right now, it's in a corrective mode, but it's trying to find a base. We'll have to see whether it finds support at the 2300 levels or 2400 levels. So that's an important zone of support for HUL. So yeah, any correction here and consolidation can be a buying opportunity. ITC, again, I would say weak on the charts, staying below 420, 425 levels. Then the stock could correct further towards 370 onwards.
All right, great insights from you as always, sir. Thank you for joining us here on News9.
Thank you.
And that's all we have in this edition of Last Check. But remember, we are counting down to the big event that News9 is organizing this coming weekend. The News9 Global Summit is about the new India that is recognized as a rising economic power and a major global player. The theme of the summit is how India is poised for the next big leap. The What India Thinks Today Summit is being organized by the TV9 Group, and this edition of the summit is unmissable because the keynote address is by PM Narendra Modi. What India Thinks Today Summit will be held on February 25th, 26th and 27th. So do keep an eye out for that.
From Fragile 5 to Top 5, from a laggard to a leader, India under Modi has reimagined the world order. Presenting the second edition of TV9, What India Thinks Today. Summit theme, India poised for the next big leap. Listen to Prime Minister Modi unveil his vision for Viksit Bharat at News9 Global Summit, a TV9 network initiative.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listing for content-oriented company in India, which is a very unique proposition.
When we look at audio in general, we had music, which is like extremely old format, and then we had podcast.
A natural extension for Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News9 Plus. News is now content. Subscribe and get free vouchers.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight. Almost deliberately.
Bangalore traffic is an example of something that has gone wrong with our system.
We have more than 50 flyovers in Bangalore city. If flyover is a solution to traffic problem, Bangalore should not have traffic problem.
According to TomTom Traffic Index 2022, Bangalore is ranked as the second worst city in the world when it comes to traffic.
The speed limit at the ORR is 80 kilometers per hour, but our vehicle has only moved